Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about ticker symbol U. A lot of people out there are big fans of his. His channel's growing like absolute wildfire. He's a really smart guy, but I'm going to tell you about how he's missing out on a very important part of the story when it comes to investing. And, it's really not great advice if you don't know this part.
All right, let's get started.
Two Stupid Guys Trade Stocks.
Full disclosure,
Right.
I have no idea what this is.
Yeah, that's all good. So this gentleman right here, his name is Alex. I forget his last name, but he is a legitimate rocket scientist, like bona fide, has a CV to back it up.
Okay, all right.
Yeah.
Well,
And
I
he's
have
got
a little bit of a, soft spot for interstellar and rocket scientists. So,
Agreed. Okay. His channel's growing an absolute wildfire. He started, I think, roughly around the same time we did. He has like 170,000 subscribers in comparison to ours. The one, he edits, his set is a lot better, and he's telling people things they want to hear. But he's missing out on a really important part of the story. I know people are big fans of his, but give me a few minutes and let me kind of make my point, and then tell me whether or not you disagree or agree with me on this whole thing.
okay.
Also,
Well,
in the background here, by the way, this chart, this massive poop emoji, kind of shape here, by the way,
yeah.
and that's my personal favorite indicator. That's Cathie Wood's ARK ETF.
Okay, nice. So
Yeah.
he has slightly more followers, just a little bit though. Okay.
A little bit. Yeah. He actually has a LinkedIn page, which is really convenient. It has his whole CV on there. This is his actual name, and he goes through a little bit about his ticker symbol U channel, what they're kind of trying to do with that. I mean, follow the whole ARK and TDOC and Square and Tesla
Ooh.
and those sort of companies.
He's long
Yeah.
a lot of companies that are getting freaking murdered right now.
Yes, exactly.
Oof.
The important thing, despite like his ridiculous academic pedigree, because this is a CV, right? Pretty legitimate. I mean, I'll be honest, I have a decent one myself, but not to this level. Okay, I can't throw Harvard, in terms of like doing research with NASA on my resume here. My undergrad GPA was 3.6. My grad school was 3.99. So I got to beat on the master's here, but not
Wait.
on the PhD.
Did you say that you have a similar one? Vinny, we went to the same school. That's where we met.
Yeah, I know. Yeah, I know. But I'm just saying, it gets, I'm not entirely retarded, despite my channel name here. All right, that's kind of the
So,
point. But legitimately did rocket research. Okay.
does that mean that because I know you, and does that make me smart then because we went to the same school in the same class?
Close enough.
Okay, I'll take it.
Enough. All right. So we're on a really zoomed out chart here.
Okay.
Right? What do you think of like looking at this chart over this long run? This is a massive parabolic, run up, big compounder, right? Really successful company. What kind of companies do you think this could be?
This particular chart that goes back to under your face, was that 2005?
2005. The length of the
Uh,
chart won't help you. There's two that I'm going to show you back to back with very similar, two very different companies.
okay. I mean, this could be a lot of stocks. This could be Google.
Yeah. Yeah.
Is it Google?
It is Google. Yeah. I love it. All right. Now, this one, I highly doubt you're going to get it. But it doesn't look terribly different, right? A big, massive compounder over time.
Well, no, oh, now I'm cocky because I just got that correct. I don't know what this is.
Okay.
Shopify. I don't even know what that stock is, so I don't know.
Nope. This would be a DPZ, also known as Domino's Pizza.
Okay. A lot of
Yeah.
people eat pizza. That's fair.
Yeah, I mean, a lot of people eat pizza. One of them arguably has changed the world in many ways. People say, just Google it, Hell, it's like Google anything these days, right? We're on Google right now, on YouTube.
That's fair.
DPZ? I don't know. Domino's, just those guilty pleasure things, right? They actually went public at about the same time. So
Okay.
the summer of 2004, all right?
Okay.
The real point I'm trying to highlight here is when you look at IPO price and this market cap here, 339 million, 23 billion, market cap today 11 billion, whereas Google is 1.263 trillion. You paid a lot more money up front for the Google IPO, right? Because it was a
Yes.
well-known name, was popular at the time, and people, it was growing very, very quickly. So you had to pay up for it. When you actually throw this stuff in, like, so I couldn't get the full picture here, so this is only going back 10 years. When you actually look at the total return over this period of time, like I said, this is not the entirety, but this is from, right now, back 10 years. Which stock do you think actually gave you a better return?
Google. Well, because it's been
No.
split so many times.
So this is split adjusted. And the other thing that this accounts for too is Domino's has had some large dividends, occasionally, which you could have reinvested.
Yeah.
But the whole idea is to capture
Okay.
$10,000 invested at one point in time, what that would have created in the future. And
As
if you
long
look at
as
the
all dividends
compound,
are reinvested?
yeah. So if you look
Okay.
at the compound annual growth rate here, you're talking about 15% for Google. Phenomenal, right? That's beating the stock market average, which is about 10%. That's a great investment. Domino's, this boring ass, crappy, mediocre pizza company, 20%.
Ooh, okay. One, very impressive. Two, I will say, there's like a 6 year tech horizontal thing that happened with like all tech stocks, Apple included, and then they just exploded, and they have the sales to back it up. I have no idea what Domino's sales is. Like, I don't know anything about Domino's.
Yeah, well, the whole idea behind, investing to really beat the market, right, is that you don't necessarily need revolutionary technology. Is kind of the point I'm trying to make here.
Yeah,
Is that
true.
boring old companies, if you pay a cheap enough price for them, can actually give you a better return.
I mean, Coke.
You know?
Buffett's a big
Yeah,
fan of Coca-Cola. They pay a fantastic dividend.
yeah. I'm not a dividend investor guy per se because there's more efficient ways to deploy capital. But my whole point here is that just because something's revolutionary and you have this guy that is a PhD rocket scientist telling you about the revolutionary tech does not mean these companies are great investments. There are
Actually,
better investments in boring old industries.
you can argue how many Googles were there as Google was coming up. So it could be revolutionary technology, but so many of them die off the bat. Yahoo was a huge one. You could look at the
Yep,
dot-com bubble and just throw a dart at a board, and it's probably
exactly.
bankrupt. So,
Yep, exactly. That is my point. And this kind of ticker symbol use style hype investing, and the big problem you run into it is that we ran into this phase where people were throwing money at anything. If
yeah.
you sounded like you had a great growth story and it could potentially change the world and put AI in your title or blockchain at one point in time, they were able to just buy it regardless of the earnings multiple.
Blockchain was a big one.
Yeah. So I'm gonna I'll tell you a little story here. Okay. So now imagine you go back to 1903 and you're looking to invest, right? And you see this new fangled thing, the automobile, and like there's all this disagreement about whether or not you should stick with horses or you should transition to the new fancy world of up and coming cars. Those things have explosions inside of them. They start fires, right? Like this is a lot of talk we hear about EVs right now, right?
Right.
But you just know it's going to happen. It's going to change the world, and you're right about it. It does change the world, right? We know what happens with the future expansion of automobiles, right? This is what we're talking about today. This whole creation of suburbia and like this urban sprawl, and now we get this burgeoning middle class because of people living on these neighborhoods and being able to commute into work and be able to afford cars and travel and have leisure time. A lot of that was created out of this. It changed the world, but look how many defunct automakers there were. Right?
Yes, this is just the MAs.
Yeah, this is from Berkshire Hathaway's annual meeting. Warren Buffett, old boomer investor, I know, right? But he kind of made this point, and this is what he's trying to say here in his last annual meeting, that just because something's revolutionary tech, and you're truly correct that it will change the world, which it very well may, it still doesn't necessarily mean it's a great investment. So
Right.
this is why I completely disagree with this hype style, like ticker symbol U kind of push style investing. Like I have no problem with the guy at all, but I'm just saying you really have to understand that just because the technology is great and have someone that can kind of explain technology to you well, which he does a good job with, that does not necessarily indicate it's going to be above average market return for the long run. You could be better off buying a stupid old boring company that sells freaking pizza.
You
you
know
know
what a good example of this also would be other than cars
what's that?
is any biopharmaceutical company in 2011 or 12, right? So that there was like a million, all bankrupt.
Yeah. He actually does delve into that realm a little bit too, so we could actually do specific videos about that if you want at some point in time. This is Ginkgo Biologics. I've seen him do a video about them. Um, But this is the main point, is that the valuations matter even more than technology in many ways. You know, if it has crappy tech, but you can get it for a cheap price, you actually may do better financially in the long run.
Yeah, for sure. Just because it's fancy and stuff doesn't mean it's going to have a great return. So does he only promote like that kind of shit?
Yeah. Yeah, that's pretty much what his channel is. He is a guy with a PhD, rocket scientist, promoting a lot of Cathie Wood style investing. I didn't look at his views over the last year and how it's gone with ARK Invest kind of coming down in favor. That'd be an interesting graph to pull up, but didn't.
Well, I will say Tesla is more fun to talk about than Domino's, right? Because you have all the possibility of conversation, all these ways that it can go, right? Domino's are just going to keep on making subpar, pizza, but it's going to sell a shit ton of it. So, you know.
I know. I agree. What's the innovation going to be at this point? The last big innovation at Domino's was putting the cheese inside the cheesy breads and on top.
I'm going to say electric car. I'm going to go electric car with blockchain technology. It's, you know, it's one of those, it's not a sexy topic, which is why we're never going to have 100,000 subs, because we don't ever talk about that crap. I'm more just trying to make money. But I get it. If his goal is to grow a YouTube channel, we could literally convert tomorrow to space. The space travel industry, only, and we'll get a shit ton of followers. I'm not gonna do it, but
rockets to the moon, baby.
Rockets to the moon. All right.
All right, guys. Let us know what you think in the comments below.
Yep. Give us a like and subscribe. Thank you, guys.